Hello everyone, Samuel here for SAMBOT.trade. Welcome to this weekly video. I hope you had a good weekend. So in this video, it's going to be a bit different from the others. I'm going to explain a trading strategy, which is trading the bid-ask spread. So I'll try to be as quick as possible because I want to keep this video short and there's a lot of info to say. So let's start right away. First of all, let's see what is the Bitcoin situation. So to be honest, it has been a bit messing around with me. So for now, I expected to have a bounce on this support. I expected it to be a support because clearly it's not right now. And to bounce back, it did not. So rather than trying to trade on every signal, I decided just to stop all my position, to sit and wait and see what it's gonna do in the upcoming days or weeks. I don't know, because every time I've been expecting a breakout, it was a fake out. So I just prefer stopping right now. And I've been working on a new strategy to trade the market with the current situation. So this strategy is the bid-ask spread trading, and we're gonna dive into it right now. So let's go, and I'm gonna take as an example the solo BTC. So basically the price, okay, is defined by an amount of buyers and sellers. Okay, so the buyers will put on limit orders, which are on the bid side. So you can see here the green area, and you have the same thing for the sellers. Okay, so basically the price will be the price in between the seller willing to sell it at the lowest price and the buyer willing to buy it at the highest price. Okay, so here you have the price, but if you want to buy, you will never hit this price. If you buy, you will hit the price of the first ask, and if you sell, you will hit the first price of the highest bid. Okay, so the gap between these two is called the spread. So the spread is you can see here, it's in BTC, and you can get it into percent simply by you just take it on the current price. So you take the spread, you put it on the current price, you multiply by 100, and you get the percentage. So this being said, now what we are trying to do, what the bot is trying to do for you, is always staying on top of let's say if you will buy, it will stay on top of the order book here, and once it has bought, it will try to sell by staying at the bottom of this every time. Okay, and if the gap is wide enough, then you make profit. If the gap is more than the fees, you make profit. Okay, so now that was the theory, and how do you find these kind of markets? So I'm going to explain this into details. By the way, I'm sorry if there's some noise, background noise. I moved to my office and I'm next to the road, so you might hear some traffic noise, and there are quite a few birds all around, so you might hear them too. I'm sorry for this. So yes, to trade the bid-ask spread, I would recommend to use an exchange with which has wide spreads. Okay, so Binance clearly is too liquid to do this, so I will recommend using HitBTC. When you go on HitBTC, you have here the market overview. You just click on it, and then you have another tab where there's the market spread. From there, you can filter by the spread, okay, and start searching. So before getting too excited about these wide spreads, if the spread is too wide, basically there's no trading volume. So if there's no trading happening, you will never be able to get hit, because what you're doing is staying on top of the order book and waiting for someone to buy or sell at the market price. So when you have such huge spreads, this simply means that there's nobody trading, and so you should avoid this. Okay, so we're gonna go down on the list, and to be more sure that the market can be traded, I would recommend trying to have a look at not too wide spreads like 2%, 1%, and so on. So we just have a look like this. From experience, I would say all the pairs that are illiquid have the highest volume in BTC. So it's better to trade for BTC, because if you take USDT, there will be very few. So now let's try to find one. Okay, there was UMA BTC. So open a new tab. So this is the new. It's RV versus HitBTC token, but okay. I think this is very illiquid, but I'm gonna talk about it later. And I'm gonna take a USD pair just as an example. So let's have a look. Here we are on UMA versus BTC. So the first thing you need to watch for is this. Okay, so you go to the trade. So this has all the market orders that have been executed and that have been, if there's an order at the market price, then it will automatically remove a limit order. And what the bot will try to do is to be this limit order which is removed, so that you can be executed. So here you have a look, and you see that in one day you had 1, 2, 3, 4, 5, 6 trade, which is very, very, very light. And when you check the amount, okay, here you see it in BTC, it's extremely low, so it's useless for us. Okay, this is too thin. There's not enough volume for us to even get interested into it. So this just goes to the bin, and you continue your search. Okay, so this is what you will need to do, and it might take some time. Okay, so after some research, I found this one, which seems to be tradable. Okay, so here you can see that during the same day we had a lot of trades. Okay, even if the volume was quite low at some time, here it can still be interesting. Okay, depending on your account size, but I mean here at least you have some. It's small, but it's still reasonable. Okay, it's not cents, I mean. And here you can see that you have a lot of trades in the same day. So here you can see on the past day that there are still quite a lot of trades, and this is an ideal candidate to trade the spread. So now we've understood how to search for it, what we are looking for, and now you need to understand one last thing before we configure it. It's the fees. So on HitBTC you can have access to your fees here. You click and you will see okay, it's not this one, I think it's here. And from there you can have your trading volume and your current fee. Okay, so here it's 0.09 for both maker and taker, so it will be on both sides. Okay, so your profit will need to be over 0.18. okay, so 2 times this value in order to be profitable. So everything over this is profit, everything under this is loss. Okay, even if you do the exact same amount, so 0.18% of profit, you will make 0. Okay, because the fees will cover it. Okay, so I hope this part is clear. So now let's trade this famous pair that we found. So I've already created a bot over here. We had some issues. Okay, so the main problem we are having actually is out of sync error. Okay, and this is caused by this error from HitBTC. Internal order execution deadline exceeded. So we are currently working on it. So we contacted HitBTC to try to understand where this comes from. But from time to time, your bot might stop due to this error. Okay, and I hope it will be fixed within this week. So let's see now how to configure it. The thing is, we are looking for very, very small profits. Okay, So give me a second. Okay, it was here. So regarding the order size, what I did here is I checked the biggest order size I would be interested in, and these are 0.009. Okay, and I set this as my default order size. I want to get out on the smallest bounce possible, so my take profit is at 0.5%. Okay, and my first order drop is 0.5%, meaning I want to get in almost instantly. And this should be, I mean, you test, you see how it reacts. If it's good, you leave it. If it's bad, you just fine-tune it. So if you put a greater value, you will be less hit, because simply it will not try to place orders before we have this kind of drops. So it's basically, there's no good value for this. It's up to you to see how it reacts based on what you put. Okay, here I'm willing to do a 0.5% profit. This means that I'm going to do 0.5 minus 0.18, okay, which gives us about 0.32, I think, percent profit. So I'm willing to trade every time as much as possible and make this profit. So the wait period here is not correct. I'm going to put it to 1. Okay, so after 1 minute it just goes and opens another position. Here I'm trying to buy back in case of a drop. So if the drop is of 15%, I will buy. And if I have a look visually, it seems quite a good range to buy again. And in this case, I use a multiplier. So I buy twice the amount so that the break-even price gets very low, and I get out on a 1% profit. Okay, and I left my stop loss at 10. So this is a test. I'm going to launch it, see how it reacts, and from there I'm going to modify my parameters accordingly. This is the way it works. Okay, there's no perfect value. You need to try and see how it reacts, and from there you change it. This kind of trading cannot be applied on paper trading, simply because the paper trading does not take into account the order book liquidity, and this means that it simply won't work. Okay, it will give you false results. So this kind of trading should be tested on real accounts, but what I recommend is starting with a very, very, very small value. So if this is too high for you, you can lower it. Okay, and you just execute like this. You will only lose cents, and it's not a big deal. And from there you will increase the amount slowly. Okay, so I think that's it. When you have these kind of out of sync errors, you simply need to restart the bot. If you have too much of them, I know it can be annoying, but I hope it will be fixed very soon. Okay, this is a new error. We didn't have it before, so maybe there's something that changed on HitBTC side. So yeah, we are working on it. I'll keep you posted. And now one last thing I would like to talk about is about the HitBTC token. Okay, so they just released a token which gives you trading fees discount, and I don't know if you saw here, but until the 2nd of June, 22 of June, sorry, you have 0 fees on every pairs trading against their token. So this might be interesting. I did not have a look yet into it, but I mean, if you have 0 fees, this means that you can do the tiniest profit and you will always make all the profit will be yours. There will be no fees. Okay, but this is a limited time thing. But yeah, if you want to do it quickly, you might be interested into it, or you can simply hold their tokens to reduce the fees. Okay, I did not really have a look into Binance illiquid coins, but if you want to check, I would recommend you do, okay, because basically finding these kind of small glitches, if I can say, this is where you will make your money, okay. Trading like this, you are always looking for something the other people are not looking for, and you are using it while it's working, okay, because things often tend to stop working after some time, especially this type of trading. So another way you could use a bot too is by trading very small for very small profits but making high volumes, okay. And from time to time you have competitions on Binance where they request to do a minimum trading volume, and with the bot you can very easily get to this trading volume and even go higher and get their rewards, okay. So this is another type of trading which I was doing during hard times in market, I mean when the market was not bullish. And yeah, I encourage you to have a look on these kind of things. Okay, so I hope you have a good week trading, and I hope this video learned you about bid or spread trading. And if you have any question, don't hesitate to send a comment and I'll be pleased to answer it. Thank you and see you next week. Bye.